Hey everybody, welcome back to the second half session of the live day trading room. My name is Curtis Galvin and we're going to take you into the last 15 minutes of the trading session here on Friday. So a little bit of weakness creeping into the S&P 500 as seen on this chart. Really it's nothing too drastic over here. The volume is exceptionally light, so you do favor potentially a bounce at some point in time. But nonetheless, markets have hit massive resistance. A cool chart that I can quickly show you on the Qs, just so that we know where we are. Let me just flip to the daily. You can see, look at this beautiful trend line. Let me just eliminate some of this volume. This trend line ceases to amaze me because you just officially tagged it today. COVID low on the Qs. What that's telling me is potentially maybe the markets have fulfilled their upside in the short term, at least technology. And why is technology so important? Because it's the largest weighting in any sector and it's the largest in the S&P. So potentially we have fulfilled the max side move, and the markets are notorious for looking like a potential breakout, and then they're notorious for ripping them lower. We went 3 for 3 in our day trading room this morning, so excellent job. But let me just flip to the intraday here on the SPY, because you are seeing a little bit of weakness creep in. We'll see if we can pierce this moving average and take out the lows. But the volume today on the S&P 500 has been anemic. It truly has been anemic. We're trading at about 48 million shares. So it's very likely, unless something drastic happens, that we're going to be having the lightest volume session of the year. And we all know my thoughts on the lightest volume session of the year. We just have to be very kind of skeptical and cautious. Now, the trades that we were able to close and win today, 3 for 3, so we're continuing a beautiful record, was AXP, American Express, twice, and STM. And I'll go over those with you in a second as we see what the S&P 500 does here. So again, that sell-off directly correlated with the Qs exactly touching that level. It's just very, very interesting. If we pull up Tesla, the Tesla chart went parabolic. Hitting massive resistance. As you know, we opened up a short. If you even flip to the weekly chart, it's extremely good for Tesla, but you pierce the weekly 200 moving average. But you're into this massive pivot zone here, this massive pivot zone, almost hitting these pivots, but that would be the next add level on our short trade. But just slowly starting to accumulate a little bit. And what's crazy about this is that this rally has come right ahead of the Fed meeting on Tuesday. Jerome Powell set to speak. Jerome Powell still remains the most hawkish Fed member and the one with the final say. And I do believe that he's really going to take that Fed fund rate over the 2-year yield, which should force downside pressure on these markets. But the volume on Tesla has been astronomically huge, showing retail's buying more than ever. And then you look at the likes of Carvana, up tremendously on the day, up over 19%. Lucid was one I day traded by myself in the afternoon. I mean, this thing was just going parabolic. Look at this volume. And then whenever you see, just a little bit of education here, I didn't put this one because I wasn't on the stream, but I did day trade this on myself and I made a nice little 10%, over 10% on that quick trade. But these stocks, when they get momentum, and this all came out, this pump on Lucid came out, obviously on the back of Tesla's strength, but then you also had the Saudi Arabia announced that they're potentially looking to buy the stock. And it's very, very convenient that these announcements come in a super light volume session where there's literally no selling pressure. So to create a short squeeze is astronomically that much easier, especially if you have capital behind you like the Saudis do. And who knows who had this, if the rumor is going to be true, but clearly based off of the price action, yes, it's still up drastically, up over 43%, but it pulling off those highs is showing that there's likely potentially some false rumors going on with the stock. Now, where I traded it was, if I looked at the weekly moving average, we pierced that 50 weekly. I wanted to use a longer term time frame because when you see these intraday moves and these daily moves pop up out of nowhere, it was up almost 100% and squeezing. You want to look to the larger time frames of resistance, not the shorter ones, the larger ones. So it's a little bit of an education, and you can clearly see it pierced that level and then came in sharply. So that's a little bit of an interesting tidbit. But when you start seeing these stocks rallying, you know, the Carvana's another, Redbox, RDBX, I mean, just, I can't even get the ticker, or Redfin, sorry, RDFN. You know, you start seeing some of these parabolic moves. You know, look at the ARK fund. Oh, RKK, my apologies, just up substantially. It really puts into perspective that it's kind of scary to see all this buying pressure right before the Fed meeting. I certainly would be skeptical of this buying, especially since the S&P is showing weakness. And then when you analyze some of the market leaders that have been performing pretty much all year long, no matter what the environment is, what stocks are giving us insider tips here that, hey, there's some potential weakness likely brewing? MRK, Merck, it's been a powerhouse all year. And you're telling me that the markets have seen considerable money flow over the last several trading sessions and Merck hasn't been performing at all. Yes, it was completely extended, which is why we're shorting it. But overall, when you see these market leaders starting to underperform and not really participate in market rallies, that's a bit of a concern. You also have O'Reilly, that is another leading stock that has seen tremendous amount of weakness. So the market does give you signals. You just have to be able to kind of interpret them and use our experience of trading. And then you look at another one, Hess. Hess has been a powerhouse, but it's actually down today. So what stocks are performing today are all the speculation money, meme stocks. So we just have to take that into account, that typically these types of stocks outperform right before the market has a turn. I'm going to take a breather now and just watch the S&P fall. Scrolling through the sectors quickly. We're just going to scroll through the sectors here of the S&P. You can see that technology's up 0.5%. Healthcare is down, so that's the second largest sector. Look at this nice little sell-off occurring. And healthcare, I'm actually super bearish on. This little pattern is not healthy. It's looking like it wants to break lower. Although you are coming into some neckties of support, it's been a really choppy session and grind lower. And it's almost like there's some announcement coming in healthcare that they're waiting for. Look at consumer discretionary, retracing to a key pivot. So notice how all the charts are into major resistance, and actually the big one, which is the Qs, just tagged it. Communications almost into that level. Financials still stuck under resistance. They haven't moved. Industrials trading near the top of the wedge pattern. Consumer staples making a little bit of a bearish formation underneath the daily 200. Utilities are slightly positive, but also putting in a little bit bearish consolidation under key moving averages and under your COVID trend, also your pre-pivot, pre-COVID high. And then you look at real estate. Real estate is about to tag the daily 200 moving average. So lots of things have plenty of resistance. Builders are down on the session, trading into resistance. And then energy has been the weak one of the session, but obviously energy has had an exceptional run, so it's down 1.88% on the back of Chevron missing. Go figure, Chevron's the one that pumped it up with the huge buyback, and then Chevron's the one that causes the energy to collapse on the missing earnings. So it's almost like the two, or they were trying to counteract each other, and they really have, because energy is not down as much as it rallied off of that Chevron announcement, which is just really intriguing. But notoriously, companies have a very, very, very strong, what's my choice of words here? Companies have a very strong probability of picking the highs and purchasing their stock price. Whenever you see share buybacks, if you look through a statistical track record of where companies actually purchase their shares and buy them back, they're usually picking them at the top of market cycles. There's very rare that companies don't purchase share buybacks at the low end of the stock range. For instance, Meta. Let's take a look at Meta. Meta, by the way, we just executed a short trade on Meta. Look at this beautiful, beautiful daily tag of the 200 moving average, a thing of beauty, and it's pulled off of that level significantly. And then you can also probably see that there is a trend line approaching that we're also about to tag as well. So there's lots of resistance approaching on Meta, but lots of resistance up ahead. And my point was with Meta announced a share buyback at around 300, and I believe, it was about 300, 350, I think the share buyback was. Let me just confirm that for you. Meta's last share buyback. Meta's last share buyback. The S&Ps are still seeing some weakness creep into the end of the day. There you go. Meta spent $45 billion at $330 a share. Right over here, around, let me just see the date. So in 2017, they spent $91 billion at $242 a share. So there you go. Their last two major purchases of share buybacks are extremely underwater. Extremely. And then at $330 a share. So roughly there. So you can see the last two major buybacks. If Meta had just waited, they would have been able to buy basically more than double the amount of shares. And look at this hard S&P sell coming in. This is really, really intriguing because now you're potentially ending the week. You have 2 minutes left. No, you won't end it with a topping tail unless something drastic happened. But nice little weakness into the end of the day. Good little weakness there. That's certainly intriguing to see. Apple pulled off the highs. Semis really saw a little bit of weakness into the end of the session there. But nothing too crazy. Tesla is still up significantly. Spiders are still positive on the session. We have about a minute, but they're actually trying to push negative. If the S&P goes negative, that would be kind of cool to see. Tech's up 1% still. Russell's up significantly. So we were able to win on our AXP, American Express. Let's just take a look at that stock. AXP was a good short for us. Twice we played AXP, but if you just look at the intraday 5 minute here, you can see that AXP had lots of volatility early on. We were able to pull our profits out over $1 in this period, and we actually ended up playing it again for a nice rally, and we were able to cover it for a profit. STM was another one that we were able to win in the morning. Basically, we covered it at 47.19, which was over here. So we played our three levels in the morning. Over here, and over here. It pulled in. We made a nice little 21 cents. So that was good to see. pretty much everything has pulled off the highs substantially. And the markets are closed. That's the market session. So let's just see the final daily candle, what it looks like on the S&P. So on a technical basis, this is what you would call a confirmed daily breakout. However, it lacks the secondary factor that you need for a confirmed breakout. So subscribe to our service. We'll teach you what that second factor is so that you can know when something is going to be a very likely breakout or a fake out. And based off of this market late day selling, the volume really increased, really significantly increased into the end of the bell, as per it usually does. But that volume just so happened to be massive profit taking and sell pressure. And the interesting thing about this rally is just keep in mind, if we're analyzing this on a short-term trend, the markets were bullish all day long, trading above the key moving averages, and then it broke and it hit the lowest key moving average from the last basically 2 days of rally. The last 2 days, the markets have seen exceptionally light volume, and then it just so happens at the closing bell on a Friday, the markets basically make the lowest level in the trend. Not the lowest price, but the lowest trend level. It broke the key trend. If you observe this 2-day trend on light volume, it really was hugging this intraday 50, and now you closed a Friday on the lower boundary trend, or actually the intermediate trend. But that just shows that, okay, there's likely some bigger money that's sold into the strength as all these crazy meme stocks and bankrupt companies were running. So we'll just take a quick moment to run through a couple of the bigger stocks like Apple. We'll do a little bit of a wrap up here. Apple finished up substantially. You can see Apple's had a tremendous rally off of the lows, basically running up 17% without any consolidation. Keep in mind, for a company to run up 17% without any consolidation, we're talking about an over $2 trillion market cap needing to maintain flows of liquidity each day to maintain this buying pressure and this trend. So at some point, especially at the key 200, you lose that momentum. Let's take a look at MSFT, Microsoft, Mr. Softy. Mr. Softy, it's funny because we shorted Microsoft on the earnings pop at 253, just over 253, and it's basically back to that level, almost there. So if we get a little bit of a pop in it, we'll look to play that short again because we made over 8.77% in 2 days. Let's take a look at Mr. Google, or Alphabet. Google's actually looking slightly more bullish than most stocks, being the fact that you did have a pullback, bounced off of the short-term moving average and looking to potentially break out. Again, you're at resistance for most of the indices, so without the market bouncing, it's unlikely Google sees a market bounce. Obviously, the fan favorite, we'll take a look at Tesla. Tesla, we're just accumulating a short now. It's gone parabolic. It's up over, I think, 70% basically from the lows. So well done, Tesla bulls, if you bought down low and were able to play that. We did have a swing long in Tesla, which we were able to play early on. Should we have held it a little bit more? Absolutely. Hindsight is always 20/20, but you never go broke from taking a profit. And then we'll take a look at Amazon as well, because Amazon's actually been performing decently well, but tagging this key 100 daily moving average, so there's clear resistance there. Amazon's the one that could also potentially rally up as seen by this bullish consolidation and now a breakout on the daily. The one thing we have to keep in mind, let's just do a volume check. Volume's decent on Amazon, but the actual broad market volume is running thin, which makes it a little skeptical. But out of all the mega caps, Amazon's looking the most bullish. If you had to pick one, you would buy probably Amazon at this level based off of this continuation pattern. And I'm not recommending anyone buy it. I certainly don't chase the price action. I am not buying Amazon, just to be clear. Let me just take a look at what's the final mega cap there. That is escaping my mind. Not those Carvanas. My list is, that's not my mega cap list. No, we can take a look at JPM. That's important for the banking sector. Let me just pull up my mega cap list. So if we look at NVIDIA is another good one. So NVIDIA is interesting. If we erase all these lines, we can see NVIDIA's also had a potential breakout of this bullish pattern. Basically, NVIDIA has finished the day strongly, and if you were to draw a little bit of a resistance point here, you have broken out to the upside. Now, the thing about NVIDIA is you're running into these pivots here, and most likely the psychology of once people start breaking even on their investment, they look to start selling. So, can NVIDIA find a continuation pattern? If it likely reaches these pivots and you start seeing sell pressure, can NVIDIA hold this breakout level? That's going to be super key for the overall health of the semiconductor space. NVIDIA will likely lead it. If you draw a trend line from our COVID low, you can see NVIDIA is trading above a key pivot as well. It has broken out above this range over here. This was your original breakdown of this little M-top pattern. Broke down, built a base, retraced there. Now you've actually broken through. Now the thing about this price action is you've broken through resistance in an extended form. I mean, simply looking a move from 139 all the way up to 203, that's an astonishing percentage move. So we have to respect that you could see some downside pressure. NVIDIA also filled a key technical gap today around 204, so we likely do see some sell side pressure occur. Other than that, we'll take a look at gold because gold's an interesting chart. If you take a look at gold on the weekly, because we just finished the week, gold is putting in a bit of this doji formation candle, so that's a little bit of an intriguing thing. Gold's retraced all the way back to the upper end of this channel, and it has done almost a measured move from this low to this high when you take this low to this high. So it's a very symmetrical based move that gold is near completing, and I do think that we see some softening in the price of precious metals moving forward, and it's probably likely going to coincide with the Powell meeting. I do think Powell is going to be probably the likely person that takes these markets lower. So February 2nd is, February 1st is when we will hear from him. So I believe that is the Tuesday. So very shortly, February 2nd is the Thursday. So basically next week we could see a little bit of a floating, chopping, grinding sideways, but we do hear from Powell on February 1st. So basically the FOMC is set to raise rates by 0.25%. I don't think we're going to get anything higher than that. Although if some of that initial job loss claims data and all the employment data that comes out early next week comes in a little bit hotter than expected, that's probably going to dictate the rhetoric and what tone Powell uses. If Powell starts seeing the employment data coming in a lot stronger, which could happen, it certainly could, then he could use more stern words, more quantitative tightening, more balance sheet roll-off. And the balance sheet is going to be key. What does the Fed do with their balance sheet in 2023? I think interest rates were the talk of 2022, but I think balance sheet roll-off and quantitative tightening should be the big focus of 2023 because that's still very imperative to the markets in regards to liquidity. You do not want to have the biggest seller, the Fed, dumping into you, and we're going to have to really pay attention to that. So as of now, we will continue to track the balance sheet through our other daily analysis videos, and we'll certainly bring you the necessary information that we think you should be privy to. But beautiful price action in gold. Gold had a massive, massive rally to the upside. So excellent, excellent job. If we take a look at finally Bitcoin, let me just find a cleaner chart, one with less lines. BTC USD. So this BTC weekly chart, there's still 2 days in the weekly candle formation for Bitcoin, but Bitcoin has seen now 1, 2, 3, 4 weeks of upside. You can see this trend line clearly that it's running into resistance. Major pivot in July of 2021 to your breakdown impulse move. In June, you had your retrace to that level, and now you've hit that level again and bounced off of it. there's a chance that you pierce it and go to this necktie of moving averages, but we'll just have to continue to wait and see on that aspect. In terms of the daily chart, Bitcoin is trying to put in potentially bullish consolidation like this area. Again, we likely won't see a break above this high or this low up until the Fed meeting. Jarring any political activities or announcements, Bitcoin's probably going to hold this range up until the Powell meeting. Maybe we see a little bit of a fake out where Bitcoin has an initial pop higher, gets in more people. That's kind of my expectation. We see Bitcoin maybe pop a little more and then ultimately drops lower to test about the 19,000 level. And then we'll have to see if it can hold the 19,000 level. If it does hold that level and can build a base and consolidate, it likely could move higher, but I'm still in the camp that that's not my base case to move higher. My base case is to move a lot lower in the next basically 3 to 6 months. So overall, I'm going to sum up and call this stream to an end. Congrats if you caught the trades with us earlier. It has been a profitable week in the day trade room. So feel free to recap, watch our videos. Please give a big like and subscribe to our channel because we need all the support that we can get. And as always, we're here for educational purposes. Nothing here is financial advice, but we strive to try to give you real life insights and experience because at the end of the day, nothing is more important than experience. We're all going to have to learn some way in one way or another. And the best thing to do is get your hands dirty and observe someone. Learn from them, watch them make mistakes so you can avoid that. I'm going to keep making mistakes, so you're going to learn from them, but I'm also going to keep making winning trades. So learn from both areas. And that's all that you can try to do. Other than that, I'm going to bid everybody farewell and enjoy the rest of your weekend. And stay tuned for more weekly wrap-ups and analysis that we will be posting to our channel. Take care, everybody. Let's go, Arsenal.
They say more money, more problems. They say more money, more problems.